Check, please.
Welcome back to Everything Money. In this video, we will discuss our thoughts and show you the financials behind Smith and Wesson, the infamous American firearms company. We'll show you their financials and what you think you should be paying for this company moving forward. We like this company, so stay tuned. We'll show you all the charts and trends trading this company. If you want to join Mo in the Business Nation, we'll get to all this and more. But why should you watch this video? I bring your questions about Smith and Wesson's and where firearms are headed in the future to a couple guys that own and operate over $100 million in real estate, multiple businesses, and stocks, and they will provide you and I with the mindset and approach to either buy or avoid a company like Smith and Wesson. I bring in Paul and Mo.
Thank you, Seth. Guys, remember, follow us on Instagram, our new Everything Money Investing Instagram account, and also follow us personally because we put lots of great lame pictures on our Instagram accounts. All right, so this is our Everything Money software. Let's go to the 8 pillars tools. Let's go to Smith and Wesson, and because I own the stock, I remember the ticker symbol. So guys, Smith and Wesson, massive drop since July. It has fallen in half basically and had a massive drop recently. What was the reason? I think they missed the inventory levels were really high and that's what bothered people. And I was like, but it's a gun. We're still using guns from 1740. How is this going to be a problem? But you know, the market likes to react to things.
Their revenue missed too, top and bottom line.
Okay. So guys, Smith and Wesson, I just read a book by Stephen King this past week called Billy Summers. It was about an assassin and a hired killer. And in it, he mentions Smith and Wesson several times. And I was like, this is a brand. This is a known brand. It's got, I mean, whenever you talk about guns, you talk about Glock, Smith and Wesson, all these brands that are sitting there. So it's currently an $850 million company. We have our 8-pillar analysis, and pillar number 1 is we want a 5-year PE under 22.5. Guys, it's 10. It's half of that.
Dang, that's
less
good.
than half of that. Pillar number 2, we want a 5-year return on invested capital greater than 9%. It's 34%. So far, this is like 2 check marks that are huge. They pay a small dividend of 1.5%, which is slightly above the market, and it eats up $13 million of their free cash flow. Guess what? Their 5-year average free cash flow is $116 million. So it's barely eating up 10% of their free cash flow. They can easily afford this dividend. All right, pillar number 3, we want to look at the revenue growth of the last 5 years. So we go to the income statement on our software. 5 years ago, it was $740 million. Last year, $1.1 billion. Okay, now look. 10 years ago was $500 million, and it's just pretty much been consistently going up. Yeah, a few blips here and there. Oh, actually, a lot of blips. It was falling right here for quite a while, and then COVID hit and boom. Now, I think things tend to happen when there's talk of, remember guys, decreasing revenue is still okay as long as you're paying a cheap enough price. And we'll use our stock analyzer tool later to analyze to see where we look at Smith and Wesson and how we think it's going to grow. Pillar number 4, we want net income growth of the last 5 years. So 5 years ago, it's $61 million in profit. Last year, 280. Check mark. I would not rely on the 280. It's selling for 3 times profit of last year. Last year was a fluke year. Do not rely on that one. Look at the last 5 years here. You want to go off long-term averages for this company. Okay. Pillar number 5, we want shares outstanding staying the same or decreasing. So we go to the snapshot of right before 5 years ago, 56.23 million, and last year, 48 million. So they're buying back shares, which we like doing on very cheap companies. We like the company using their cash to buy back shares. So this is a check mark and a good one too. Pillar number 6, we want to look at their long-term liabilities. So we go back to the main page of our software. We go to their 5-year average free cash flow, 116 million. We multiply that by 5. So it's $580 million. We want their long-term liabilities under $580 million. So we go to the balance sheet in our software, scroll all the way to the bottom, $53 million.
Wow.
They can basically pay back all their long-term liabilities with 5.5 months of free cash flow if they're able to generate the same free cash flow that they did in the last 5 years over and over. All right. One thing I also want to make note of, their total current assets, so basically cash on hand of 333 million and total liabilities of 156. So they can take all their cash and inventory pay off all their liabilities, and still have $200 million left over, $180 million left over. So you're basically paying $180 million less for the company versus the market cap. So just keep that in mind when you look at this company. This is a value play on that level, and I'm hoping the brand sustains. Now, I'm not a gun guy, but people who have guns like Smith and Wesson. So hopefully that continues. Now, pillar number 7 and 8 have to do with free cash flow. Free cash flow is cash from operations less your capital expenditures, and you can use the free cash flow to do one of 5 things: buy back shares, pay a dividend, pay down debt, make acquisitions, and reinvest back in yourself. So we go to the cash flow statement of our software, cash from operations less your capital expenditures, and we added this line for you to make the math easy. Five years ago it was 9.66. Last year was 267 million. Check mark there with an average of 116. So our final metric is we take the 5-year average free cash flow of 116 million, multiply it by 20, just have a market cap that we start with. That is $2.3 billion. Market cap's 840 million. So massive check mark there. And you'll see that in the 8 pillars tab. We have all 8 check marks here. Now, guys, the big thing on Smith and Wesson is it's had a really fluke year. So don't go there and just say, oh, because last year was awesome, it's continue to be that way. No, go be conservative about it. So we're going to go to stock analyzer tool, because every investment's the present value of all future cash flows, and we don't know the future. So we have to make assumptions about the future and see if it plays out. I'm going to go very conservative on the 10-year analysis. Mo, do you mind if I just take over on this one?
No, I'm interested to see your revenue growth because I have something in mind.
I'm actually going to go -3, 0, and 3% revenue growth. So I'm going to assume it loses 3% revenue growth for the next 10 years. Why? Because maybe the last couple of years they were declining revenue, and now maybe it's going to go back down again. Okay. Profit margin. I'm going to go 10, 11, 12. Free cash flow margin, 12, 13, 14. PE. I'm going to go 6, 8, and 10. And free cash flow margin, same thing. Average return, 12.5%. Hit the analyze button. That's why I'm buying this company, guys. If they just keep revenue the same, it's a buy all day at 17. Even if their revenue growth numbers are declining, if their revenue is declining 3% a year for the next 10 years, which would be way more than 30% drop, we're looking at still basically almost being in the range, and they're going to buy back shares along the way. And I'm only putting multiples of 6, 8, and 6 times PE and 6 times free cash flow. Mo, what do you think?
Yeah, I think it's very, I don't, it's conservative, but I don't think it's out of the realm of, I don't look at it going, whoa, those are crazy assumptions. I think that those are very fair. I mean, you're going to have years of big swings up. You're going to have big years of big swings down. But overall, it's very possible that they continue to decline very slowly. And that's fine.
And if their revenue growth just stays the same, they just have no revenue growth for 10 years.
Yeah,
just stays
that's
flat.
fine too.
You're buying a company for $17 that you can pay low 20s for.
And
Guys,
I don't think that'll happen,
well,
which is even better situation for you.
Yeah, exactly. Now, guys, this is a prime example of what could be a value trap. I do acknowledge this could be a value trap. I look at this going, okay, they have more cash. Things like this are happening. I'm looking going, okay, but I'm willing to make a bet on this one, because if I find 100 companies like this, I'm willing to make that bet on them, because I'll probably do very, very well. And that's what you're making whenever you make an investment in a company. This, to me, is a value play. And I'm not going to own this company long term, because I do worry about regulation. I do worry about, people trying to take away our guns. But I think guns will be around for a long time. And we look at it going, there's a lot of people out there who love guns. And Smith & Wesson's a great brand that has grown over the last 20 years. And I hope that growth just stays the same for the next 10 years. And if it does, I'm going to do quite well. And that's my take on this.
It seems like some of the regulations, Paul, are maybe for some of the larger guns with, that can shoot multiple bullets quite quickly. But I do know that states are loosening their rules in terms of concealed carry. Ohio is one of them, maybe coming very soon, that you don't need a concealed carry permit to take a gun places. So it seems like maybe for smaller handguns, the world might be opening up to this concept of everyone being packed, stacked, loaded, locked and loaded, any of those, you know what I mean?
I also look at it as how many years has this gun assault on assault on guns been going on, and still these companies are doing well. There's
You
still
mean
people
assault
still
on
buying
our
guns
Second
and wrapping
Amendment?
cases. So, what's that?
You mean an assault on our Second Amendment?
That's what I'm saying.
If you want the software behind Paul, you can get it right now to make better financial decisions. Paul, tell them how.
So guys, we made this software because we got so many requests from our subscribers saying, hey, how do I analyze my own stocks without having to wait for you guys? So we said, okay, let's just invest hundreds of thousands of dollars and do this. So we created our software. It includes everything you saw already. It's all in a mobile app. So it's already ready for your mobile phone, fully ready to go. You've got all the 8 pillars, retirement calculator, stock analyzer tool, 8-pillar portfolio, exclusive daily content. 1 to 3 videos per day from Seth, Mo, and I, only for the subscribers of our software. Plus, you get everything here that's coming soon. This is all coming soon. Get it all here, available for you. But most importantly, the biggest thing you get is we have a community of over 6,000 people who use our software every single day. You can talk to them about all your investment ideas because a lot of our users felt alone thinking about investments a certain way. And that's why they gravitated to our channel. But now it allows them to go talk about any investment ideas, including crypto, with people in the community, bounce ideas off each other, make all the decisions you want. And this is all for only $1 per day. $1 per day gets you all of this. If you can increase your returns by 1 or 2% a year, or decrease your losses by 1 or 2% a year, it will lead to hundreds of thousands, if not actually millions of dollars in extra net worth for you for only $1 per day. So 2 ways to sign up: everythingmoney.com or Patreon. The benefit of everythingmoney.com is we aren't big enough yet to charge a sales tax. So you'll save on the sales tax for quite a while. So again, guys, $1 per day, sign up, everythingmoney.com.
If you want to trade Smith and Wesson at a quicker pace, you can join Mo. He's the leader of the Bid and Ask Nation, our top trading tier, and he'll show you how to trade this company. Go ahead, Paul. Mo, take it away. I love you.
All right. So we have this big gap down that happened that Paul was talking about. So I do think that this gap is eventually going to fill. So I think you have a play on here. What I would tell you to do is just throw a tracker share on here. Guys, this is $17.74. The worst case scenario, if you buy 1 share of this, is the company goes out of business and never exists anymore, and you lose $17.74. That is the benefit of a tracker share in this position. Plus, we're starting to get that. It's starting to tick up a little bit. So maybe buy a share when this thing gets going and starts moving to the top, breaks out, makes an engulfing candlestick over this high of this a little consolidation area. Then you can make a little bit of a run on it. I think this is a good situation to be in. Now, the challenge you're going to face is you need a lot of volume because you're going to be running through 4 major moving averages. So that'll be your tough part. But when you have these gaps down, they're tough to get through, but there's a big benefit on the way up. So I would definitely tell you to pay attention to this one, throw a tracker share on, and just wait, be patient. This one will more likely than not pan out for you in the long run from a long-term perspective. But look at this, guys. Just like we're seeing in the rest of the market, look at the volume. I mean, we are today, the average volume of this is 1.83 million shares. We are 206,000 shares traded this morning. So be careful with volume on this one. It can be rather light. And from a day trading perspective, unless you get moves like this, where you get these big days of big drops and big rallies up, I would not recommend day trading this. There's just not enough consistent volume here to give you movement. These little dashes that you're seeing, it's meaning that the price is not moving. It's just staying stagnant in a 15-minute period. So this is a great example of what not to day trade, just because you want more volatility. You want movement in there. So obviously you can capitalize some gains to the top or bottom. So if you want to learn these rules, come and join me in the Bid and Ask Nation. You'll get access to my Trading 101 series, which is all of the rules that you need to be successful. You'll learn what a tracker share is. You'll learn to be able to trade this thing long-term and capitalize on it. You get my Employed Trader series, which is 6 stocks that I go through every single day and update you on and do the legwork for you. My exclusive Saturday seminars, 1 Saturday per month, open Q&A sessions just to the Bid and Ask Nation and the chat community of 950 plus people that all want to do the same thing as you. Come and join us.
That is Smith and Wesson. We will keep you updated on this 8-pillar company. Paul owns it, and we'll certainly let you know. Paul, you'll let us know if we ever get rid of this thing. This is a very long-term play, though, right? You're liking this.
Well, no, it's not a very long-term play. I'm going to get out of this the second it hits a certain threshold, and that threshold is probably in the 30 range. Like, I do think this is a $30 stock, and so I'll probably just wait till it hits 30. along the way. And if the fundamentals get better when it hits 30, then maybe I'll reevaluate. But I'm looking at this as not a long. It's not like Visa. We just did a video on Visa. If I'm able to buy Visa at a really cheap price, I'm keeping that thing forever.
All right, good to know. We'll keep you updated, guys. Get the software. You'll love it. Join our community. See you next video.